70% of all gold production in the U.S. comes from a single state, Nevada. Conventional wisdom says that all the good deposits have been found. But one geologist who's discovered more than 30 million ounces of gold says he knows where to find Nevada's missing gold. And right now, he may be on the verge of being proven right. Investors and speculators can learn more at futuremoneytrends.com/gold. Greetings and thank you for joining us at futuremoneytrends.com. I have the guy who follows the gold market like nobody else. His insights and analysis are the best when it comes to understanding what's really happening with the gold price, the day-to-day moves, and as a sweetener, he also has amazing economic analysis. And you know, at this point, we're looking at everything's been doctored that comes out from the media, and it's pure propaganda and manipulation. And it's nice when you have somebody like Andy Hoffman of Miles Franklin to go through all of this data. Very educated guy who's been in the business for a long time, but he studies this, again, like nobody else. And he can kind of let us know where all the bull crap is. I'll be soft-spoken on that. But Andy, thank you so much for joining us.
Yes, it's a pleasure to have you. And, you know, the calm tone of my voice now may not be the same tone you'll hear at the end of this podcast, given today's $1.5 billion of notional gold dumped on the market in 1 second's time at the open of the COMEX, which just happens to be the day before COMEX options expiration and 2 days before the all-important Janet Yellen speech where she'll say absolutely nothing, is because the entire world knows she's going to say nothing because there's nothing that she could say. But when it comes to, you know, watching the markets and why I can be reassuring, et cetera, look, if you're in paper markets, I can't reassure anything because they could do anything when the fingers are being pushed on the computer buttons. But that said, the beauty of everything that has to do with economic nature is that there are limits. In the case of physical precious metals, it has the ultimate limit in that there's barely any actual above ground inventory out there. And the more that prices have been pushed down, the more it has contributed to that tightness by causing the undisputed peak. Undisputed, it has happened already. Not, oh, it's going to happen. Gold and silver production peaked last year. They went down last year, and they're going to continue to go down. And at the same time, demand around the world was at an all-time high, and above ground inventories, even the ones that they publish, are at all-time lows. And I'm sure if we saw the unpublished one, such as whatever still remains in the coffers of central banks like the U.S. Treasury, whatever still remains that's available for sale, I'm sure is very, very tiny compared to where it was when this scheme started 15 years ago. So that's the limit on trying to manipulate physical markets, let alone when currencies are crashing and people around the world are clamoring for something that will save their purchasing power. When it comes to financial markets, again, the risks of being in them are far greater because the games, both upside and downside, are far larger and far more dangerous. But there are practical limitations, such as in the case of, for instance, I wrote The Myth of QE to Infinity a while ago. We're already seeing the fact that the Japanese government, for instance, ran out of bonds to buy, so they're buying stocks. Now they're running out of stocks to buy. The ECB pretty much ran out of sovereign bonds to buy, so their choices are either to buy all of them or to diversify into corporate bonds, which has turned Europe now into a hotbed of fascism and socialism that like nothing we've ever seen before. And again, there's always that specter of hyperinflation, because if you can continue to print money and try to prop up markets, you're eventually going to cause hyperinflation, as we are seeing in many parts of the world now. That word hyperinflation is, most people only consider bad inflation if it's like Venezuela, but the cost of living around the world is soaring, ironically, as much in a lot of these places which complain of deflation, like Japan, where they have amongst the highest cost of living in the world, and London, for instance, as anywhere else. And now you're seeing, some of those markets that were propped up crashing. The London, it's amazing. They prop up stock markets for a little bit and they claim everything is okay. If everything was okay post-Brexit, why did the Bank of England just cut interest rates to practically zero and say we're going to do it again, raise QE, dramatically lower their economic forecasts, and watch the pound fall by 15%? And by the way, the high-end property market in London fell 20% in a week, and it's still falling. And it's not just London. The high-end Vancouver market has fallen 25% in the past month. I mean, this is where money that was supposed to protect people from these policies was put, and it was all dissolved within weeks' time. And eventually, the same thing will happen with stock markets, whether it's nominally or in a 2008 style crash, and of course, in bonds. I mean, we're talking about a third of all the bonds in the world now trading with negative yields. And people are talking about how we're going to raise interest rates with the worst imaginable economy, the worst economic conditions of our lifetimes, with crashing commodity prices, with an election on top of that, elections everywhere on top of that, and the highest debt of all time everywhere. Of course, they're not going to be raising interest rates. They're going to be lowering them. It's the monetary Roach Motel. They're going to lower and lower and lower them until eventually there's a crash or hyperinflation. And they're going to suppress precious metals prices until all of a sudden there's a shortage like we had in 2008 and 11 and 13 and 15. And arguably, except for 2008, there were no real crises in the other times we had major shortages, which were principally focused on silver. So I assume that pretty soon we're going to get to a point where not only are we past the point of no return, where no longer can things be propped up, but you will no longer have avenues to protect yourself.
Andy, there's several questions I have for you that just from the comments you've made that I really want our listeners to fully understand. So first off, this morning is Wednesday morning, and about $1.5 billion worth of gold hit the bid. So for people who are listening to this, who don't follow this, who are just trying to buy some physical gold from Miles Franklin or wherever they're getting it, and they don't understand what the heck just happened, can you explain to us real quickly how much, first off, why a wealthy person or a wealthy fund, why that is not normal, and what would be normal if you were going to exit a position of $1.5 billion?
Well, if you're going to exit any position, what you do is you try to trade out of the position. You're very careful. You only hit the bid if you know the bid is not going to go down without you selling anything. The fact that someone, quote, dumped $1.5 billion on the market doesn't necessarily mean that they got filled on the order. It just means they put an order in. There's never that kind of supply in any market on the bid. And that, then when you say someone, it's not someone, it's the U.S. government. I mean, it's what I call the gold cartel. And even when people say, well, the gold cartel is the bullion banks and everything, no, it's the U.S. government. It's the entity at the top with the deepest pockets and the most to lose from monetary disorder. They need to still be the world's reserve currency because it allows them to print more money than everyone else. It still causes massive cost of living increase. But, because we're the reserve currency, meaning there's more dollars out there, so they're harder to get rid of and they're more used for things, we can get away with printing more money. And the only way we can continue with that is if this Ponzi con game where people actually believe the dollar is worth something continues. And that's why they are constantly attacking gold. What happened today is nothing new. I mean, I've watched this every single day for 15 years. Lately, it's been much more subdued. Because so many people around the world are catching on to this con game and they've been buying gold. That's why gold in practically every currency in the world is at or near, in some cases way above previous all-time highs. It's only here at the center of manipulation where it's 30% below. But everywhere else around the world, they're, I say, enjoying record high prices, but they're enjoying them at the expense of a far greater cost of living increase and political and social strife, which is ultimately what we're going to see here. What is happening is the government is trying to protect its position, but as I said, starting early in this call, there's practical limits because when demand's at a record high and supply is falling and inventories are all but non-existent, you're only going to exacerbate this trend. I mean, we've had a couple of hits this year in gold and silver during this, the bull market clearly restarted earlier this year. We've had a couple of minor hits, but nothing as egregious as what we've seen in the past 2 or 3 weeks, which, as I said, coincidentally is timed perfectly with the literally two slowest weeks of the year outside of the Christmas week, where everyone is on vacation. I mean, look at the news. There's like no news articles because everyone's on vacation. So when you see on Sunday night at 6 p.m. Eastern, when I looked at my phone and saw that silver had fallen 40 cents in the first minute of trading on Sunday night, when everyone on Asia is asleep and everyone in America is at a barbecue, which is, by the way, exactly where I was, you realize how desperate the efforts are and how everyone sees this by now. I mean, and again, you don't believe me that everyone sees it? What about George Soros and John Paulson and Stan Druckenmiller and Jeff Gundlach and all the big money people who are telling you that they see it? If the big money sees it, of course the governments and the sovereign wealth funds see it too. So again, we're in the late stages here. If you don't know what's going on and you're worried, you should look at this and go, wow, silver was $19.70 on Thursday afternoon, and it's $18.55 today, when nothing else has changed really in any other market, except, by the way, interest rates have plummeted in front of the so-called hawkish Janet Yellen speech tomorrow or Friday. It's not going to be a hawkish speech. The point is, all you're doing is getting a gift, because it's going to eventually cause the premiums to surge and the supplies to disappear. And all of those trends that I'm talking about of the worst economy ever, they're only going to get worse. Here, a perfect example is oil, right? I mean, earlier this year, 2 years ago, I wrote, everyone should read the direst prediction of all. I kind of channeled my David Stockman in saying, oh my God, there's so much oversupply from all of these years of money printing and financial engineering of everything from ghost cities to copper mines, that we're going to be in a prolonged deflation of industry for years to come. And sure enough, commodities got crushed. The CRB index is down about 25% since I said that. And then this year we got to $25 per barrel oil, and all of a sudden what I deem the oil PPT, there's no doubt in my mind that this oil PPT was created because, let's face it, that was one of the biggest catalysts of the collapse earlier this year when stock markets had their worst start of the year. Because everyone knows that I think it's a third of all U.S. CapEx and probably more of global CapEx is commodity related, and oil and gas is by far the most. And so they're trying to prevent all these defaults, which are going to happen, like in the shale companies, for instance, from occurring. So they push prices up to $50. They constantly create rumors of OPEC freezes, not even cuts, freezes. It's ridiculous. Freezing production at record levels. I mean, Saudi announced record production last week, so we're supposed to believe that somehow they're going to help on the supply side. And they got prices to $50, and then they crashed back to $39, which is more realistic. And then sure enough, the other day, more rumors of production freeze announcements, and they're all unfounded. They've already been denied. But they're so desperate to prop things up, just as desperate to prop oil up as they are to keep gold down. And they're going to fail miserably on both fronts because we have record bad fundamentals for oil and stocks and bonds and real estate, and record positive fundamentals for precious metals. And all these trends I'm talking about are only going to exacerbate them. It's a catch-22. It's a feedback loop. Everything that the central banks do, everything that the politicians do, everything the corporate titans try is only going to make things worse for them and better for people who are embracing reality.
Sure, it's certainly imploding on itself, and you can see that the whole economy is fraudulent. Central banks, you got Eastern central banks buying gold, Andy, and then you've got the Western central banks buying stocks. And I'm actually kind of interested in that. First of all, people need to understand these guys are literally printing money to buy shares. This is an absolute scam. It makes it contaminates the whole thing beyond point of it. It's before it was a manipulated joke. Now it's just outright open fraud when you got central banks printing money out of thin air to buy shares. With that said, though, Andy, just like Eastern central banks are obviously hedging the fiat currency world and the U.S. dollar with gold, do you think it's possible these central bankers who are literally making up it as they go along at this point with their experiment, they know they're going to crash and burn, but hey, they have some Google and some McDonald's and some ExxonMobil on the books now. Shoot, even the Swiss National Bank just disclosed a few weeks ago they've got mining shares. Deutsche Bank has mining shares. Is it possible that there is more than just the manipulation, that when this whole thing implodes, hey, I'd rather have a share of McDonald's stock than the U.S. dollar?
No, I don't give them that much credit. I would think that the smarter ones, and of course some of those guys aren't pure Keynesian Atlas Shrugged cartoon characters. I mean, some of them got to their positions by being reasonably intelligent in monetary and financial matters. So I would bet that some of them have stashes of gold and silver. They certainly know they can't talk about that, but I'm sure some of them do. And as for, a share of McDonald's protecting you, well, first of all, McDonald's shares have done terrible because their business is falling apart. But no, I don't believe that there's that much. I don't give enough credence.
McDonald's might be fine dining in a few years.
Yeah. Well, it's already being priced like fine dining. People don't even realize that this supposedly cheap place is not so cheap anymore. But again, no, the guys at the Fed, for the most part, they are brainwashed, highly paid government employees. I mean, the Atlas Shrugged is such a perfect analogy of where they stand. They've pretty much sold their souls for these situations years and years ago. Janet Yellen doesn't even remember if she ever once embraced reality because she's been ensconced in a system which pays her very, very well and gives her all this respect and admiration for basically spewing lies. And she also knows at the same time that her job and her livelihood and her reputation and credibility depend on propagating those lies. So it's kind of like the Goebbels thing. The more you repeat a lie, the more likely people are going to believe it, including yourself. So while I do believe that some of them are know what's going to happen, occasionally there was a guy, Kevin Warsh, he comes out and he says stuff all the time like that. And I'm sure some of their partners, and again, when we talk about the cartel, and people say, well, it's the bullion banks. No, JP Morgan is not the cartel. JP Morgan is the partner of the cartel. The cartel is the U.S. government and any other Western governments interested in maintaining the status quo. They are just their partner. They're their operating arm. They're the ones who do the trades for them. So they are out there in the markets. It's probably them or one of their proxies that throws $1.5 billion of gold at the market in 1 minute to push the price down. And they, of course, know beforehand this is coming, so they can front run it and make money doing it. But they, for the most part, I'm sure they all know exactly how the game works, that they're not brainwashed. And I'm sure the people at JP Morgan have plenty of gold and silver, including Jamie Dimon. And in fact, according to Ted Butler, if you believe his data, JP Morgan has the biggest stash of physical silver in the history of the planet, not including its quote, custodianship of the SLV, which is theoretically the biggest stash of silver. So I'm sure JP Morgan will do just fine, assuming that they are not pitchforked or bankrupted by all their derivatives when eventually that whole game goes, which may be Deutsche Bank that catalyzes or something else that we haven't even seen yet. But no, the biggest thing that I need to impart on people, and I have tried for years, is because, look, there's so many people out there that want to believe that everything is so simple. Look, there's just a handful of guys, the Rothschilds, they're sitting in a room planning, and if just things go a little wrong for their plan, everything is going to go wrong. Or maybe it's web bots or solar flares or biblical prophecies or something that's going to explain things. There's no explanation. The explanation is can kicking to the highest order, Keystone cops armed with weapons of mass financial destruction, just trying to keep the status quo going for a little more. And like the movie Fargo, it's the best imaginable example of how this game works. Once they dig themselves that hole, they just have to dig deeper and deeper. In the beginning of Fargo, the guy just needed a little money, so he arranged a fake kidnapping. He figured he'd pay the ransom, and the next thing you know, he'd have his money and all's good. And by the end of the movie, everyone is dead. That's the situation when you're in a Ponzi scheme, which is what fiat currency is. We're at the later stages now. Currencies are dying, commodities are dying, political and social order are dying, and of course, the monetary system is dying. So that's where we stand right now. There's no higher order in control of what's going on. There's nothing planned about what's going on, although there's plenty of meetings trying to stave off reality. But no, they will not stop reality. They have not stopped reality. Look where we are today. And tell me, for instance, Mario Draghi, 3.5 years ago said he'd do whatever it takes to save the euro, whatever it takes. I mean, did anyone even say at the time, well, how could you save the euro by printing as much euros as possible? Well, sure enough, he did print as much euros as possible, and the euro currency is falling apart, the euro continent is falling apart, and by proxy, the entire global economy is falling apart. So for anyone who believes that these guys are omniscient or they have any idea what they're doing or that monetary policy works, they don't. They just have the ability to manipulate markets to a point where over a short period of time it feels like someone knows something, but they don't know something. They are wrong about everything. They screw up everything, and in the end game, everything that they try fails. And it has throughout history, not just now, always.
Andy, last question. I want to talk about silver supply. We've got 26 zinc mines shutting down temporarily in China till next June. We've had major zinc mines and lead mines go actually deplete themselves. In fact, Hudbay just announced a few months ago that their 777 mine, is done. It'll be kaput in 2 years. And then looking at the primary silver producers, as if they're really even primary silver producers, there's only really truly like 3 or 4 that you could actually say that today. Most people don't realize that when it comes to Pan American Silver or Hecla Mining or even Tahoe Resources, these you can either call them base metal companies or gold companies, but less than half the revenues even come from silver. What does the supply look for silver right now? Are we going to? I know you and I had talked about this potential cliff dive. What do the cards look like for silver for the next, let's say, 12 to 18 months for physical supply from the mines?
Well, if you go back to the Miles Franklin All-Star Webinar Silver Panel from, I think, October 2014, that was David Morgan, Harvey Oregon, Bill Holter, and Steve St. Angelo. I hope I didn't miss someone, but it's 2+ years ago that we did that panel. And we came to the conclusion that at the way things were going, again, this is 2014, we could see a 25 to 50% drop in silver production over the next decade. And sure enough, in 2015, unequivocally, because everyone in our sector is always like, oh, you're always saying things are going to happen. No, silver peaked. It was down last year. I think silver production last year was down 5% or so.
It was.
Yeah. Well, it's going to keep falling. And as you said, you're talking about zinc mines. Zinc is, 2/3 of all silver production in the world is the byproduct of other mines, principally copper and lead zinc mines, a little bit gold mine, but mostly copper and lead zinc. Now, zinc, of the 3 metals you're talking about, has been the one that has performed the best. Copper and lead prices have fallen off the map. Both of them are close to all-time lows. So if you're seeing zinc mines shut down right now, and most zinc mines, by the way, are zinc lead, you're going to see far more in the coming years. And we've already had production start to decline. And I can't emphasize enough. I just talked about the direst prediction of all article I wrote. Industrial demand is toast around the world for years to come. Not like for a year, 6 months. I love when these people go, oh, well, the oil, there's historic inventories, but don't worry, it'll correct itself in 6 months. No, it won't. We're a year from where we were. I mean, last year, the gasoline stocks in America, we were an all-time high. I think they're 25% higher right now. And people are like, well, yeah, well, it's going to correct in a year. No, it won't, especially because demand is going to fall. And every time these idiots talk up the oil price, look what happened. The rig count goes up and all the what they call the frack log comes on. All those wells that were drilled, the oversupply of wells, they come on. So all these things are going to keep going down. Copper, lead, and zinc, are you kidding me? Demand is plummeting around the world. Japan, I just wrote last week the ugliest economic data I've ever seen, which is actually part 2, because Japan's imports and exports fell in July by 25% and 15% in 1 month. Okay, that's the future of demand. Demand is not stable. It's going down. So you're going to see a huge oversupply of commodities, particularly things like copper and lead and zinc. So you're going to see more and more mines shut down at a time where we already have historic lows in supply. And then you look at, there's nothing more manipulated than the COMEX inventories, but they're showing all-time low silver inventories. I mean, they're down like, 90% from 2011 or 2013. There's like $500 million left, dollars, not 500 million ounces, dollars left. That's all. And you know that the same is going to be the case everywhere. So, we're talking about, we've had silver shortages in 08, 11, 13, and 15. And with the exception of 8, we didn't even have a real crisis. Here we're talking about the whole world falling apart, politically, economically, monetarily. And, now they're really pushing their luck here with this, pushing the prices down this fast, because it's just going to instigate a new shortage. And, here we are going into the fall, which is the time where most of these things start to unfold. So I expect, I wrote back in June, I wrote the upcoming historic silver shortage. And I believe that the second that the semblance of summer doldrums control is broken, and there are more than enough catalysts coming in the next few weeks to break that down. As soon as that even mildly breaks, I think you're going to see a fear like we haven't seen since 2008, except this time there's 3 times as much demand in the world for silver as there was in 2008, and production is lower, and above ground inventories are lower. So if we're specifically talking about silver and its ridiculous gold silver ratio of 75 or whatever it is, compared to the historic rate of more like 15, and the rate it comes out of the ground, which is more like 9, absolutely ridiculous. It's the investment of a lifetime. But be careful how you do it and who you do it with, because times are going to be tough. And there's going to be a lot of fraud out there. And that's why a company like Miles Franklin, which has been around 27 years without a single registered complaint, is going to be someone you're going to want to turn to.
Absolutely. I do my business with Miles Franklin. And look, everybody, if you want to diversify out of country, which I highly, highly recommend, Miles Franklin has storage in country and out of country. But I happen to recommend the out of country ones more, just because I think you should have good, safe diversification. And in neighboring countries also, there's huge benefit of that, obviously, from just a mobility standpoint. Everybody check out milesfranklin.com. You can also see Andy Hoffman's daily blog as well as his audio blog. Andy Hoffman of Miles Franklin, thank you so much for your time, sir.
Oh, always a pleasure, Daniel.